Good morning and welcome to today's webcast, Prepare for New Requirements for R&D Claims. Before we begin, I'm going to play a brief housekeeping video.
Welcome, and thanks for joining us. We're pleased to present another in our ongoing series of continuing professional education webcasts to help companies and individuals conquer challenges as they plan for what's next. Our presentation will start in a few moments. Before we begin, here are a few things to keep in mind. You can customize how you both view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can also adjust window size and placement or enter full screen mode using the controls at the top of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons, each relating to a different aspect of our session. You can download the group attendance sheet and a PDF copy of today's slides from the slide deck and handouts widget to the right of the slide view. You can ask our presenter questions during the webcast by typing a question in the Q&A window below the slide view and clicking Submit. We'll do our best to answer all questions during the presentation or follow up via email. If you experience technical difficulty during today's presentation, refresh your browser by hitting the F5 key. Today's session will offer you 1 CPE credit. To receive credit, you must meet the requirements as specified by the National Association of State Boards of Accountancy. You must attend at least 50 minutes of the session and respond to at least 75% of the polling questions, which we'll ask throughout today's presentation. To respond to a poll, click the button next to your answer. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon in the CPE Progress widget to open a PDF file that you can save to your computer. Don't worry if you can't download your PDF certificate today. We'll email a copy to you in 2 weeks. If you're attending this webcast in a group, you must complete our attendance sheet to receive CPE credit. The attendance sheet is available in the slide deck and handouts widget. Please have all group members sign it and send only 1 sheet per group. Also note that CPE credit can be awarded only to participants registered as themselves and isn't available to participants who view the on-demand version. As a reminder, the presentation you're about to see isn't legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
I'm pleased to introduce today's presenters from Moss Adams R&D Tax Services Group, Star Fischer, Partner, and Travis Riley, Principal. And with that, I will turn it over to Travis to get us started.
Hello, everyone. Good morning. Thanks for joining us on this topic today. I realize that everyone is eager to discuss some of the new guidance that was just issued by the IRS, all the new requirements around claiming R&D credits on an amended return. And that's something that we're going to discuss today. But first, we're going to start by providing some background just about the R&D credit itself and some of the benefits of claiming the R&D credit. We're also going to discuss some of the R&D tax credit fundamentals so that everyone has a basic understanding of how the R&D credit works and who it applies to. So that way we can put some of these new requirements into better context for everyone today. Then finally, we're going to get into more of the specific documentation requirements. And as part of that discussion, we're going to dissect some of the new guidance issued by the IRS and talk about the types of records that you'll need to submit with your refund claims starting here in just the next couple of weeks. But before we do that, we are going to jump into our first polling question.
All right, our first polling question. My company has claimed the R&D tax credit each year. And your options are A, yes, B, no, or C, I'm unsure. And I'll give you a few moments to respond. To participate in our polls today, please click the button next to the answer you choose and hit Submit. And if anyone is having any difficulties seeing the polling questions, you might try refreshing your browser. I'll give everyone just a couple more seconds here. All right, let's go ahead and take a look at the results. Travis, back to you.
All right, so it does look like most people on the call are claiming a credit, just roughly over half. The other half are either not claiming a credit or unsure whether or not they're eligible for the credit. So yeah, this conversation is relevant to everybody on the call today. To those of you that are claiming the credit already, those of you who are considering it, I think we have some good information for you. So starting off with the background, just want to talk about the history of the R&D credit and then go over some of the benefits. So R&D credit has been around since 1981, so for about 40 years now. But back in 1981, when it started, the intention was really to make the U.S. more competitive on the global stage. And back then, our biggest competitor wasn't China, Russia. We were competing with countries like Japan and West Germany at the time. And it was a really big deal to make sure the U.S. was staying competitive. But over the past 40 years, there has been quite an evolution of the R&D credit. So there's been new legislation, court cases, regulations, IRS guidance, and it seems like something has come out probably every year, if not multiple times a year, there's changes or new guidance that's coming out. So here with the timeline, we just want to highlight a few of those key changes. And back in 2001 and 2004, we had regulations that eliminated what we often refer to as the discovery test. So the discovery test said that you had to obtain knowledge that exceeds, expands, or refines the common knowledge of skilled professionals in a particular field of science or engineering in order to qualify for the credit. So you really had to be doing something new to the world, something that was very unique in order to qualify. And that was put to rest with the 2004 final regulations. But even after that was put to rest, the IRS has attempted to apply that over and over again. And this is something that's been pretty clearly squashed by the courts. But the reason I'm focused on this, the reason I highlight it, is because that elimination of the discovery test was a game changer for a lot of companies. It really expanded eligibility and opened up the R&D credit to a lot of different companies across a lot of different industries. So it's really important when I'm talking to companies and say, yeah, we looked at this 15 years ago and we didn't think that we qualified. Yeah, I like to explain how those requirements have changed and how that discovery test was eliminated, because it really did broaden it up to a lot of different companies. Then here on the timeline, if we fast forward all the way to 2015, another key change here, the R&D credit was made permanent by the PATH Act. So that's a big deal because for most of its history, the R&D credit was a temporary credit. It's a credit that would expire just every few years and would literally take an act of Congress, usually at the very last minute, to extend it. So we're glad that we have some certainty around the R&D credit being final now, being permanent. Also with the PATH Act, there were some other major enhancements. One of those being the ability of qualified small businesses to utilize the R&D credit against payroll tax that they have to pay on all their employees. That's a big deal for startup companies, loss companies, companies that are in a position where they're not paying any federal income tax. Fast forward again to another key change that we saw in 2016, and this one applies to companies that develop software that's strictly for internal use. And the intent here with these regulations was to clarify some of the rules around this type of software and really make it easier for small businesses to qualify. And of course, fast forward to 2017 with the big tax reform bill that was passed. And this bill had an impact on R&D credits indirectly and actually increased the amount of the credit by about 20% on average. So there are many, many changes not here on this timeline, but those are some of the key ones that I wanted to highlight. Then getting into some of the potential benefits. The R&D credit is the largest business credit out there, and I don't even think it's close. There's a credit at the federal level, and there's also something like 38 states that also provide their own R&D credit. A lot of those states have credits that mirror the federal credit. They're very similar to the federal credit. R&D credit is based on your R&D spending, and generally speaking, some percentage of your R&D spending translates into a credit, a tax credit, that can offset your taxes dollar for dollar. So for example, if you're a company doing R&D here in California, where I'm at, then that percentage could be as high as 15%. So, I mean, we're talking $150,000 for every $1 million in R&D expenses that you identify. 1 million used to sound like a big number, but seems like that's getting easier and easier to hit with inflation, rising wages, and just the ability overall to include a lot of expenses in the credit calculation. A lot of times, we're not just looking at the current tax year, but all open tax years. So depending on where you're located and where you're performing research, we can usually go back 3 or 4 years to capture credits. Then on top of that, and I mentioned this earlier, but startup companies can get up to $250,000 in credits per year for their first 5 years of operations if they meet certain requirements. We've worked with a ton of startups that have already received over $1 million in credits since 2016. And the great thing about that credit is that you can use it against payroll tax on all of your employees, not just the employees that are performing R&D. Just some other things to consider here with the benefits. Even though there's not a limit on the amount of credit that you can claim, there can be some limitations on the amount of credit that you're able to utilize each year. Those limitations really depend on your own specific tax situation, but it's something that you definitely want to be aware of and make sure that you evaluate on the front end. Any credits that aren't used are carried back 1 year at the federal level or carried back for up to 20 years at the federal level. Some of the other states have their own carryover provisions. Next, we're going to switch gears and talk about some research credit fundamentals.
Thanks, Travis. And to the audience, I apologize in advance if you hear any background noise. There's a construction crew right outside that decided to start up this morning, so I'm hoping it's not too loud. So the reason we wanted to cover the research credit fundamentals in this presentation, it might be a review for some of those who are already claiming the credit. However, the documentation requirements really relate to proving that the R&D you're taking qualifies. And that's why we wanted to revisit what are the qualifications in order to better set the stage for what the documentation requirements are going to be around those. So those of you that are claiming the credit probably are aware of the 4-part test: technical uncertainty, process of experimentation, technological in nature, and qualified purpose. And we're just going to go through briefly each of these and provide some examples of how you might document that they qualify. The first test is that an activity has to involve technical uncertainty. So R&D credits are generally claimed on new product or new process development or improvement to those products or processes. And one of the key elements is that there has to be some technical uncertainty that you're trying to overcome with that development. You might know 100% that you can develop a new product, but the process of how to get there is uncertain. And that's really the key, is that it have will accomplish it, kind of the capability or method of how it's going to be accomplished is uncertainty comes into play. In order to eliminate that in technical uncertainty, you would go through a process of experimentation. That process of experimentation can involve, often we see trial and error, simple trial and error. Also could be where you're actually prototyping, modeling, and testing, kind of going through that more standardized scientific method approach. This test can be the most challenging to document. And it's one of the key areas that the IRS is looking at in exams right now is documentation of the process of experimentation. It is acceptable to get the documentation for this test through interviews with subject matter experts. So if you have an R&D professional interviewing a subject matter expert and using those interview notes as documentation. However, the IRS prefers that the documentation is contemporaneous or closer to the action. So for manufacturing or engineering companies, this might look like retaining the revisions to your engineering designs. A lot of times revisions get replaced by new ones, and so we don't track that kind of process, the evolution of experimentation through the design revisions. For technology companies, again, can be hard with computer programming, but if there is a task management system or some kind of ticket system where you're documenting what issues came up and how they were resolved, that can provide great support as well. In food and beverage and agricultural companies, it might be just taking notes, when you're doing experiments. It doesn't have to be anything high tech. It could just be a notebook with notes that are being taken as you go through this process. But it is important to note what you tried, what worked about it, what didn't work about it, and how you're going to adjust going forward based on those results. A key here is that you don't have to try multiple times and fail for it to qualify. You have to consider one or more alternatives. So you can get it right the first try and it still be eligible. It's just there has to be uncertainty as to whether that would be the case or not. Obviously very gray and applies differently to every industry and every company and how we really recommend you document this process. The next test is technological in nature. The process of experimentation has to rely on the principles of physical sciences, biological sciences, engineering, or computer science. This test can be very easy to prove if you have degreed engineers or degreed scientists working on your teams. That kind of the IRS prefers to see that. However, we have a lot of companies that we do R&D work for who have a lot of very experienced people acting in these categories, acting as an engineer and is relying on those principles of engineering, but may not be degreed, and that is totally acceptable. We would just take more time to really document and support their role in the R&D process and why it's qualified. And the final one is qualified purpose. The intent of the research has to be to develop or improve a business component's functionality, performance, reliability, or quality. So what that means in real terms is that the result has to be that you're trying to either create a new product, implement a new process, manufacturing process or other type of process, or improvements to those. This test can be easier when there's a tangible product at the end of the day, meaning if you're designing and building a piece of equipment that you're selling that equipment, that kind of proof it's a new product. If it's a software activity and you design a new software program, the program is the business component. It can be more challenging with engineering or architecture firms where the business component, the qualified purpose business component is a design package, for example, where it's how to design something. And there's been a lot of recent court cases on when that does qualify and when it doesn't qualify. It certainly can. But really this test is just, that there has to be an intended outcome of actually creating something, not just pure research on behalf of someone else. And that brings us to our next polling question.
All right, our second polling question: which of the following is not part of the 4-part test? And your options are A, technical in nature, B, process of experimentation, C, industry first technology, D, qualified purpose, or E, technical uncertainty. And as a reminder, if you would like to receive CPE credit for today's webcast, you will need to respond to at least 3 of the 4 polling questions. We'll give everyone just another moment here. All right, let's go ahead and take a look at the results. Star, back to you.
Great, thank you. Well, it looks like the majority got this right. One of the, what's not one of the four-part tests is industry first technology. And that refers back to when Travis was talking about the elimination of the discovery test. So you do not need to be creating or developing something that is completely new technology to your industry or to the world. It just has to be new to you. So a competitor or another company could already have implemented this or created this new product or implemented this new process, but as long as you're not getting step-by-step directions on how to do it and you are really going through that process of experimentation to figure out how you can do it, you can still be eligible. And that was a key aspect to the credit being open up to more companies, is the change of that. That brings us to the specifically excluded activities. And this, the R&D credit is very gray in what qualifies, and there is not, even we'll go through, the current documentation requirements, but really there is no specific set of if you provide this or you document this that you are going to be deemed to qualify. That's just not in the tax law, and so a lot of it is just supporting the activities as best we can and as best you can, and then working with the IRS on a reasonable negotiation. There are specifically excluded activities. However, many of these are still considered eligible if they meet the four-part test. So it's kind of a circular issue, but these are all the ones that are deemed excluded unless proven otherwise, basically. The ones to really focus on that we come across a lot are internal use software. Although it says it's excluded, there are rules on when it is eligible. It's just by default, it's not eligible unless certain qualifications or presentations do. But although it's noted here, excluded, can and often is eligible. Funded research in the area, see with the IRS right now, there's a lot of recent court activity regarding funded research, and that is in order to claim the R&D credit for your company and for projects, you have to have risk of failure. If the R&D is not successful and you are not able to provide a customer with what you're contracted to do, there has to be either holding of payment, or it has to be a risk to fix the mistake or to get it to a point where it meets the basic functional needs. How kind of is really almost in line with contractual terms. So if you're doing work for a customer on time and materials basis, for that R&D. If you are doing work on a fixed fee or some basis, that is much easier to say you qualify under this funded research exclusion. And if it's time and material with a cap, that's very much in the gray, and it depends completely on how the contract is worded and the other clauses that might be present in the contractual agreement. The other side of this is that in order to claim the credit, you have to have substantial rights to the research. You do not need to have exclusive rights. Shared rights are okay, but you really need to show that you have some rights to use that research in future projects. And this slide just highlights all of the industries that we do work for companies with respect to the R&D tax credit. It's pretty broad in its application, and depending on the specific company, it can be present in any industry, really. It applies differently, and there's definitely some different nuances and things that the IRS will focus on depending on the industry, and that is why a lot of R&D professionals, and especially at Moss Adams, we align with industry groups for this reason, because we started to see a lot of patterns with IRS examinations, as well as just how the credit is applied and utilized. So it's pretty broad. And that brings us to what are eligible R&D costs. These are the costs that would make up the credit. As Travis mentioned, the credit tends to be 5 to 10%. of a cash benefit of the eligible costs. So these are the costs that we would be looking at to really determine what the credit is. Wages, supplies, rental or lease cost of computers, and contract research. We'll go through each one briefly here. Qualified wages would be labor, internal labor that is dedicated to R&D efforts. And so you would look at each project that's eligible for the credit and then who's worked on that project and the amount of time they spent on it. Time tracking is not a requirement, although it is nice to have. There are other ways you can use estimates to identify how much time a person spent on a project. We have time surveys, and through interviews, there's a bunch of kind of methods that work in place of time tracking, so that's definitely not a requirement. It includes direct support and direct supervision, so if you have someone, testing out a product or physically building a model or prototype, their time doing that would qualify, as well as direct supervision, so engineering managers, managers of a product development department. We see sometimes even CTOs qualify, just depending on the hierarchical structure of your company. And there is a substantially all test, and this isn't new in code, in the tax code, but it's been defined in a recent court case that we have to do this new calculation as part of the R&D analysis. And the substantially all test, there's two parts of this. There's one that if a person spends 80% or more of their time in R&D, then you get to include 100% of their W-2 wages in the calculation. So that's one of the substantially all rules. The other one is that 80% of a project's wages have to be direct R&D, meaning that direct support and direct supervision by default kind of has to be less than 20% of the overall expenses of an R&D project. And that's a new calculation that we've been doing just based on a recent court case to make sure that we're good there. Qualified supplies. This is typically larger in construction, manufacturing companies, not as much in technology. Supplies are used in the research process. They do not have to be destroyed or consumed, although the IRS really likes when they are, but typically they are not, is what we see. And it can include prototypes and pilot models. And a key here is that the prototype can become the commercial production model. It just has to still have uncertainty until it's fully tested and built, fabricated. And so we've been seeing a lot of increase in prototype and pilot model expenses over the last few years as several industries are investing in customized equipment, new technologies, and really driving innovation and automation. It doesn't include capital items. So if you buy a piece of equipment off the shelf, for example, that's going to be used as part of a new manufacturing process that you're implementing at a new facility, for example, the off-the-shelf equipment would not be eligible as a supply. However, the process itself could qualify, and you could, have qualified labor and contract research related to it. But it does not include items that are already, the R&D work's already been done, and you're purchasing an off-the-shelf item. And it doesn't include general or administrative supplies. Computer leasing. This, for a while, was kind of outdated. It was put into the tax law a long time ago, basically before everyone had their own computer and would go to facilities where they would rent computer time. But where we're seeing it apply now is with cloud computing. It wasn't written to cover that, but just by definition, it does. So if you're paying for cloud hosting fees as part of your R&D effort, then you could take those costs as part of the R&D credit calculation. And contract research. This would be qualified activity that's qualified if you had, a person as an employee, but you're simply contracting out for whatever reason. We typically see contracted engineering, contracted testing, and it's basically the same requirements. When we're looking at this at-risk, number 2, that's kind of the opposite of the funded research. So in order for you to claim contract research expense with a specific contractor, you would have to have risk of failure. So you want to be paying them time and materials, and if you're paying them time and materials, then it would be part of your credit calculation. So that we kind of look at the contracts, but looking at it from a kind of the opposite perspective. You also have to have substantial rights or shared rights to the work that they are performing for you. Contractors are limited to 65%. So whatever you will pay those contractors, 65% of it would be included in the credit calculation. And that brings us to our next polling question.
All right, our third polling question, true or false? Market research studies qualify for the R&D credit, and your options are A, true, and B, false. For those of you that would like a copy of today's slide deck, you can download them from the folder that says Slide Deck and Handouts to the right of the slide view. You'll also be sending the slides via email after the webcast. We'll give everyone just a few more seconds here. All right, let's go ahead and see what everyone has to say. Back to you.
Okay, most people said false, which is the correct answer. Market research, because it's one of the excluded activities in the social sciences, it is unfortunately not eligible for the credit. However, we do see some sales or marketing folks included in the credit calculation to the extent you might have a sales engineer, someone who does sales but also evaluates projects based on technical feasibility or is able to talk to potential customers about what will and won't work from a technological standpoint. But yeah, pure-based market research studies are not eligible as a default. And that will bring us to the documentation requirements, and I'm going to turn it back to Travis to start us off with this. And as a side note, thank you for all the questions we see coming in. We will get to those at the end of the presentation, so if you have any questions.
All right, thanks, Star. So let's talk about documentation. There is always so much talk around documentation when it comes to the R&D credit. So many questions, so much discussion around this topic, and that's because the regulations on this are intentionally very flexible. They say that a taxpayer claiming the R&D credit must retain records in sufficiently usable form and detail to substantiate that the expenditures claimed are eligible for the credit. What I just read there is word for word, verbatim, what it says in the regulation. And that's all it says. So let's deconstruct that a little bit. Let's dig in, see if we can fill in some of the gaps on documentation before we dig in and start talking about some of the new requirements that were just issued by the IRS. So documentation should do all of the following things. So we're going to hit on these first three bullets. First, documentation should substantiate the amount of your expenses. So first thing I like to point out here is that documentation includes a lot of the records that you're already producing on a day-to-day basis. So think of things like W-2s, tax returns, GL records, 1099s, invoices, contracts with customers or vendors. Those are all types of examples, records that could help support your R&D credit. Moving on to bullet number 2, documentation should provide nexus between qualified research expenses and activities. So there's really a lot of different ways that can be accomplished. As Star mentioned before, time tracking is not a requirement, but if you do have some sort of time tracking in place, then you're 10 steps ahead of everyone else. Even things like a code repository, if you're a software developer, and the repository shows the name of the software engineer who checked in the code. Things like that could demonstrate that nexus that's required here. Other things like the Outlook calendar appointments or emails. Really what we're looking for here is anything that connects you to your R&D projects. Any of that type of stuff could be helpful in establishing that nexus. And then the third bullet here, documentation should demonstrate the nature of your qualified activities. So really you need to be able to demonstrate that you're meeting that 4-part test that Star went over. And again, this is something that you might already be generating just during the normal course of your business. And so you just need to gather some examples of those documents. So think of things like design documents, design revisions, test records, lab notebooks, meeting minutes, proposals with customers. We see a lot of PowerPoint presentations, just rattling off a lot of different examples of things that could be helpful in demonstrating how your activities satisfy the 4-part test. So documentation should really hit on all 3 of those things. And some common issues that we see here when it comes to documentation, some of the common roadblocks that we see here. So you could, let's see, availability of people and financial records for the base years. You know, going back in time, if you have a lot of turnover, that can be really difficult. So, you know, you want to talk to these people while they're still employed at your company. And it's important to really be proactive about this. Going back in time to gather historical records, it may be required to calculate your credit, and it just can pose a lot of challenges. So it's important to really be proactive and stay on top of that. But overall, this should provide you a pretty good baseline of the types of records that, in the past at least, have been acceptable for supporting R&D credits. I wanted to talk a little bit about the authority governing the R&D credit. Because when we're talking about documentation requirements, I think it's really important to understand just the structure of the rules that govern R&D credits. And what I've outlined here, I tried to list these really in order of importance, but that's a little bit arguable. Some would probably argue that case law should be number 1, just given that U.S. is a common law system. But yeah, I think most people would agree this is kind of the order of authority governing the R&D credit. So we start off with the Internal Revenue Code itself, the tax code. Then we have Treasury regulations, and we have case law, and then IRS administrative guidance. And the second to last bullet here, you'll see chief counsel advice. So from a legal standpoint, it may not hold a ton of weight, but from a practical standpoint, it holds all the weight in the world. Just because IRS, they're on the front lines of deciding whether to accept your claim or deny your claim. So the new guidance we're about to talk about falls within there. It's Chief Counsel Memorandum, and you know, following this it's not really optional if you want your R&D credit processed. So it's something that we're going to have to live with, at least here in the near term. But let's talk about how we got here. Just one case I wanted to talk about, and it's a case from this year, from 2021, called Harper versus the United States. So, taxpayers here were the Harpers, husband and wife. They filed amended returns to claim R&D credits, and the IRS audited them for 4 years, and then ended up denying their credits. So, Harpers wanted to recover those credits. They sued in district court. They sued the government. And then the government in district court argued that the case should be dismissed because the Harper's R&D claim did not meet the specificity requirement of this Treasury regulation, 301.6402. You're going to hear a lot about this specificity requirement. So I'll let you read it there for yourself. You know, basically saying the claim wasn't specific enough. And so a lot of the discussion we're about to have on the Chief Counsel Memorandum is around the specificity requirement in that regulation. So The case was dismissed by the district court, so the district court sided in favor of the government and the IRS, and then the Harpers appealed it to the Ninth Circuit Court, and at the Ninth Circuit Court of Appeals, they won, so the decision was overturned. So long story short, the appeals court basically said that the IRS essentially waived the specificity requirement by auditing the claim for 4 years. And just as a side note here, a lot of people believe that just completing a form 6765, which is the form where you claim the R&D credit, and attaching that to your tax return should be enough to meet the specificity requirement. At least it always has been in the past. This has never been an issue until now. So I'll also point out here, there were several other cases this year that involved the specificity requirement. So this is definitely a shift from the IRS. This is the approach that they want to take going forward. This is a focus area of theirs. But all of these cases were ultimately decided in favor of taxpayers. So this chief counsel memorandum that we're about to talk about, this is really the IRS's response to those decisions. So just wanted to mention what kind of led up to the chief counsel memorandum. With that, I'm going to hand it over to Star.
Okay, and that brings us to the new guidance from the IRS. As Travis kind of alluded to, with the tax return, all you really file to claim the R&D credit is a Form 6765, which has a whole bunch of numbers on it. It's basically the result of doing an R&D tax credit study in the quantitative aspect, but there's been no requirement that you include anything qualitative to support those numbers. So no project write-ups, no examples of what you're doing as qualified activities. It's really just a bunch of numbers. And so for years, the IRS has been working on how do we go through appropriate audit selection processes with the R&D credit when all we get is a form that has a lot of numbers. It doesn't really give insight into what claims are riskier than others or which ones should be selected for audit. So this is a response to that. This is something that they can then issue that requires a taxpayer to provide more information so that they can have a better audit selection process. This was released very recently, just 2 months ago today, and it outlines the information that the IRS believes should be included with a refund claim for the R&D credit. And by refund claim right now, it's looking back. So if you're going back and amending tax returns to claim the credit, this will be a requirement, this information. It details what format they want to see the information, and it also discusses considerations around the statute of limitations. And this is not, when you are amending a tax return and providing this information, this is not an audit procedure. This is a selection procedure. So the IRS is requiring this information in order to approve a refund to be sent, or maybe to select it for examination. It could be either. But if you do not comply with supplying this information, it's very likely that your refund claim will just be disallowed. They will not accept it. We'll go into some more details on what the specific requirements are. Back to Travis.
So here we've outlined what the IRS believes is required to submit with a refund claim. And this is what they say, these are the 5 essential requirements that should form the foundation or the basis of a valid R&D credit claim. So first they say, these are must-haves. You have to identify all of the business components to which research claim relates. So in other words, your projects. But business component, that can mean a product, a process, it can mean computer software, technique, formula, or an invention that your company holds for sale or lease or license or something that you use in your trade or business. So you want to be very specific and make sure that you're calling out those specific business components. The reason the IRS believes that's essential is because they want to be able to apply the 4-part test to those business components. And if you don't outline your business components, there's no way for them to do that. So this is very essential to provide that. Number 2, So they say identification of all research activities performed for each business component. That's very vague. I think a lot of people are asking, what does that mean? How much information do I need to provide? And so, you know, that could mean at a high level, things like constructing a hypothesis, evaluating alternatives, things like modeling and simulation, or just things like testing. I think those are all examples of research activities that you're performing, and you need to outline those for every business component. So there's probably a lot of different ways that you can do that, and we'll get into the format here in just a minute, but that's one of the essential requirements that they've noted. Number 3, so identification of all individuals who performed each research activity for each business component. So that's something that you'll have to provide. You'll need to list out the names of the people who worked on each business component or each project. And you know, a lot of times if you're performing an R&D study, that's something that you're doing already. And number 4, identification of all information that each individual sought to discover for each business component. This is probably the most open-ended request here that we're hoping to get some clarification on. You know, some of the different ideas thrown out there, maybe creating some kind of Excel-based matrix with notes for each individual, or maybe even trying to do it by job title and seeing if that's sufficient. But there's a lot of questions on this one, something we're hoping for more guidance on. And then number 5, total qualified wages, supplies, and contract research expenses. That is something that's going to be on the form 6765 that you're already completing. And so that one's kind of a non-issue. That's a given. Moving on to part 2.
The second element that will be required is the taxpayer must provide a declaration signed that they are verifying that the facts are accurate. So what this does is really makes it clear that as the taxpayer, as the client, that you are understanding and supporting the R&D claim and not solely relying on whoever your provider is to do the credit for you. You really should understand what and agree with the activities being claimed. And this was the next 3 kind of all go together. It's interesting. The IRS is basically anticipating that taxpayers are going to just produce a whole bunch of documents, basically quantity over quality, just kind of throw the book at them with all these documents that prove that they qualify for the credit. And the IRS is very clear in this that they want it to be concise, to the point, and addressing the key issues, the 5 foundational information requirements that they laid out. Even if you do a formal R&D study and have a deliverable, it's probably not wise to just attach that deliverable as support for the credit claim. We are kind of going down the path of really making sure we are just addressing very specifically the requirements that they laid out so that our clients have a better chance of avoiding examination, although it'll yet to be seen kind of where the IRS is going to land on who they select to examine and who they don't. But given the context of the Chief Counsel Memorandum, it's fair to assume that the more you comply and address the things that the IRS wants to see, the less likely they will deny your claim, and possibly the less likely to select you for examination if they believe it's a very valid claim.
And number 3, the third element that was addressed in the Chief Counsel memo was around the statute of limitations. And statute of limitations is pretty well known in this area. It's 3 years from the date your return was filed, or 2 years from the time the tax was paid, whichever one is later. So I think Chief Counsel did research on this just to consider what would happen if a taxpayer submits a claim within the statute, but then maybe the statute expires when there's still some back and forth going on between taxpayer and the IRS while they're trying to perfect their claim. So it looks like the IRS attorneys came to the conclusion that a claim would still be valid under that scenario. So that's good news for taxpayers, and sounds like they came to the right answer on this one.
So those are the three elements, and these are just additional considerations that were included in the memorandum. This memo takes effect pretty quickly, January 10th, 2022. Claims filed after that, you will need to provide this information. And basically the guidance says the IRS is not just, if you don't contain that information, the IRS won't select you for examination, they will just reject the claim. You will then have a 30-day grace period to supply the information and resubmit the claim for consideration. Right now, this appears to only apply to amended returns and not to credits filed on original tax returns. This could change. We'll see when the further guidance comes out. And additionally, because the IRS is saying this is the information we want to see, we are recommending that even if you're not amending, that you start making sure you have this documentation in this format, even on original filed claims, in case you are selected for audit. It may very well be that that's the first thing they ask for in order to assess risk. There is more guidance coming, and there's still a lot of holes missing. We're hoping to get some from further insight once these FAQs and interim guidance come out. We obviously don't have much time before the January 10th deadline for more guidance to come out, so I do think there's going to be, unless it gets extended, the deadline gets extended, we are going to be looking at, replying the best we can without that guidance. That brings us to our, I think, final polling question.
Okay, our last polling question here. My company's R&D credit claim is adequately documented to meet the new requirements. And your options are A, yes, B, no, or C, not applicable. And once you have completed all CPE requirements, you will be able to download a PDF of your CPE certificate from the CPE progress window to the right of the slide view. We'll give everyone just a couple more seconds on this final poll here. All right, let's go ahead and take a look at the results. Back to you.
Thanks, Emily. So, pretty more split than I was thinking, but yeah, it seems like at least close to half of you are good with your documentation requirements. Yeah, a lot of these requirements aren't things that you aren't already doing in an R&D study. A lot of it we have to gather. It just hasn't ever been supplied to the IRS. So obviously providing it to the IRS requires, you want to make sure you have a thorough look at it and it's in the format that they're requesting. So a lot of this is just more of an additional step other than a completely new study. And that brings us to questions, and we have quite a few, and we'll get through what we can and then follow up with individuals that we don't get to with their questions separately after the presentation. We'll start with this first one. For Travis, would use of software such as Confluence to track all progress be acceptable documentation of the process?
Yeah, so it would be helpful. It's not going to provide everything you need, but as I mentioned before, even things like code repositories where people are checking in code and it has their names on it, or any kind of bug tracking software where it's tracking issues. You have that issue tracking capability. Some of the programs even have time tracking capability, but anything like that would be helpful for supporting your R&D credit. Let's see here. I'll take another one. Says for startups who just claimed who claim the payroll tax credit, this Chief Counsel memo would not apply because it's an income tax refund question. So for the payroll tax credit, that is not something that you can claim on an amended tax return. So as of where things stand now, we do not believe that the Chief Counsel memorandum is going to apply to original tax returns. And so you are correct that it would not apply to the payroll tax credit. But any further comments on that, Star?
No, I think that's accurate just because it's not filed on an amended return. And, I think one of the other questions kind of went with this, but when it's not a refund claim, what does that mean, even if it was on an original return? What if it's just a carry forward? And all that, those questions haven't been answered yet. Right now it is worded that it's only if you're claiming a refund. So I think there'll be more guidance coming on that. But yeah, I agree, Travis, with your answer. And I can take one here. Is Moss Adams offering new services to address these requirements? Yes, we are. We are working on a template that will kind of follow the format that the IRS is requesting without giving more information than needed. You don't necessarily want to give it all of it. So you want to give enough that demonstrates that you adhere to the new requirements, and also that the R&D is so obvious that they don't need to audit it. So that's the balance we're trying to find. Again, we do a lot of these steps already as part of our study, so it is an add-on. It's not a complete overhaul of what we were doing before. But yes, that's in the works, working hard to get it done by the January 10th deadline. Take another one here. Does implementing an ERP system that we bought, subscribed, qualified for the R&D? The purchase of an ERP system itself is not qualified. However, if you are hiring consultants to make modifications, add specific modules, or change things specific for your company, those costs may be eligible for the R&D credit. At a minimum, they are generally eligible as an R&D expense and do not need to be capitalized. And then from there, some of those costs will meet the definition required for internal use software. So we look at those studies kind of twofold. One, what doesn't need to be capitalized, and then also what is qualified for the credit.
All right, I'll jump in here and take some. A lot of questions coming in. Thank you for all the questions. So some of these are very fact-specific. I've got one here. It says, for a biotech company in phase 1 clinical trials and beginning of phase 2, the manufacturing costs performed by outside providers to support clinical trial is most likely qualified as a QRE for R&D credit purposes, and that's a question. So it's a good question because depending on how those agreements are structured, that may be included as either a supply expense or a contract research expense. So if at the end of the day you're paying a fixed price for materials, that's most likely going to be a supply. On the other hand, if you're paying for a service and you retain rights to all the intellectual property, then it's most likely going to be a contract research expense. There's a benefit to including it as a supply expense because you can take 100% of that cost, whereas a contract research expense, you have to take a haircut on those and you take 65% of those costs. Let's see. I got another one very fact-specific asking if royalty expenses for new crop varieties would qualify. See, varieties that are tested over 2 to 5 years. So I would say on this one, the royalty expenses do not qualify. There's a couple of issues with that. It doesn't qualify because it doesn't fit into one of those cost buckets, the wages, supplies, computer leasing, or contract research. And there's also some other implications with royalty expenses. But based on your question, I would say that you may have other expenses that would qualify. I'd be interested to talk about those projects and outline some of the things you're doing that could qualify. Let's see, do we have time for one more?
Yeah, I can take one. Does all R&D have to occur in the U.S. to qualify? If so, if manufacturing outside U.S., R&D taking place in a different country is invalid. Any research performed outside of the United States does not qualify, whether or not it's a U.S. employee or not. It's based on where they are performing the research. It doesn't mean that they don't qualify in total, just their time spent outside the U.S. does not qualify. There is a little bit of an exception with supplies. If you are purchasing a supply that was manufactured overseas, for example, and you are using it as a supply in your R&D and it's being tested here in the United States, then that may still qualify as a supply. But as far as any labor or subcontracted research outside the U.S. does not qualify. And I think that we're at time. We do have a few questions remaining, and we will follow up separately with those people to make sure you get your questions answered. And thank you for attending, and please reach out if you have any additional questions.
All right. Thank you, Star and Travis, for a great presentation today. As Star just mentioned, we did have some questions come in that we didn't have time for. We will be doing our best to follow up with you after the webcast. As a reminder, if you attended today's presentation in a group and would like to receive CPE credit, you must complete the group attendance sheet found in the slide deck and handouts window to the right of the slide view. If you participated as an individual and met all certification requirements, your certificate is available to download now in the CPE progress window. I'll keep the webcast console open for a few minutes to give you time to download your CPE certificate. A copy of your CPE certificate will be emailed within 3 weeks should you have any difficulty downloading it now. Here is a link to an online survey where you can provide feedback for today's presentation. Please take a moment to complete this survey as your feedback is very important to us. Thank you for joining us, and we hope you'll join us again next time.